Well, look, I think that the market is set up. When you look at just the market, when you look at the business cycle and so forth, I think it's set up for further upside. I think the profit cycle is going to get easier as we go into 4Q. I think there is something to be said about the inventory cycle perhaps reaccelerating. Positioning is very low. Sentiment is extremely negative. So I think there's a setup or a case to be made for upside. Now, obviously, market is currently being held hostage by policy, trade uncertainty, and so forth. And that's where ultimately I think we need to sort of make a call. And we're sort of thinking that, we won't necessarily get much more trade escalation as far as the next layer of tariffs go.
I mean, some people, Dubravko, with all due respect, think we're going to get a lot more, that you have a trade war morphing into a currency war. And who knows what the next step is going to be as it relates to tariffs. So how do you deal with that?
So look, so far we've had phase 1 and phase 2 implemented. And now they're basically threatening phase 3. Phase 3 is directly targeted at the U.S. consumer or basically the U.S. voter. Given that we're entering 2020 and re-election, I just think that's a very, very risky thing, something that would basically knock down the probability of a potential re-election. And so that's why I'm not very convinced that that's something they go forward with. But in the meantime, yeah, we could basically be seeing more noise.
You think there's that Trump put, if you will, for lack of a better way of saying it. He's going to try and protect the House, if you will, as best he can, and keep the stock market from deteriorating to a meaningful level.
Yes, I definitely think there's a Trump put. You could make a case that temporarily there's also a Trump collar, meaning that some of the upside is also being capped, for sure, due to the escalation. But yes, there's a Trump put. Now, in addition to that, we are getting also a global central bank put as well. Not just the Fed, but globally central banks are responding relatively quickly to the slowdown, which has been primarily induced by trade. And I think that will basically provide stimulus and act as a tailwind to the broader cycle in the months and quarters ahead.
Yeah, but how much visibility do you feel like you have on earnings, given the uncertainty that exists around trade?
Look, there's a million question marks. And what I will say is the following. The most trade-sensitive stocks, yes, they've taken a hit, and I think that's being reflected in the prices. The sort of call it higher margin, more service-based stocks, sort of the bellwethers of the U.S. economy, I think have generally done much better. And if anything, in 2Q, many of them have actually revised their guidance higher. So I think that they are basically coping with all of this relatively okay. So the high momentum, the high quality stocks, I think, should be able to hold up.
Dubravko, it's Joe. Thanks for coming on today. Do I need to now think about profit margins differently than I was thinking about them prior to the president's tweet? And as you've indicated, consumer products potentially now are going to be caught in the crosshairs of this trade dispute.
I am not as worried about the profit margins, let's say, as far as phase 3 is concerned. We're basically estimating that if the president moves forward with this 10% tariff, that's going to basically shave off about $2 off of S&P EPS, again, mainly through margin contraction. Full 25% would be higher, about $4 off of EPS. So I think S&P can weather that. I think the bigger question is what happens to the consumer, the private part, the private side of the market, the small businesses. That's the area that I think is more vulnerable.
I'm sorry. No, please finish your thought. My apologies.
No, so I'm saying that's the part that's more vulnerable, and that's where I think the focus should be put at. And given that, again, the consumer at the end of the day cares the most about their wallet, their well-being, their economic well-being, and so forth, I think it's a very, very sort of tricky and risky for the U.S. administration to basically impose call it some form of regressive tax on the consumer, which would basically be phase 3.